Lots in the news, not any of it really good for interest rates today, y'all. Wish I had better news. Let me dive in and give folks their update. Mortgage News Daily has a 30-year fixed rate conforming loan nationally, 6.43% today, y'all. We were at 6.29 a week ago. We were at 6.05 a month ago. Y'all, we only have to go back 3 weeks to see multi-year lows. We were at 5.99 3 weeks ago. So all of this due, of course, to the Iran war. The price of oil is on a severe upward trajectory, y'all. We're seeing Brent crude over $110 a barrel. Those are multi-year highs, y'all, for the cost of oil. Obviously, that is putting a lot of jitters through the market. The Fed met today. And of course, they did not move on interest rates today. They were not expected to. Jerome Powell, as pretty much expected, y'all, focused on inflation, focused on pricing pressures associated with the higher energy costs, made no mention of what is essentially no job growth for all of 2025 and a weak labor market. Remember, the Fed has a dual mandate to keep inflation under 2% and to keep full employment. Or as much as is possible in either of those categories, and those are equally weighted in the Fed charter, y'all. So the Fed chair is choosing instead to focus entirely on inflation and had no mention at all on the weakness in the labor market, which is a bit telling, y'all. There's obviously some political pressures that are at play here. I think everyone is aware of those. The CME FedWatch tool, y'all, this is kind of critical because for the first time, you cannot find any place this year where the CME FedWatch tool has even a realistic chance of a cut this year. In fact, even the last meeting of the Fed in December only has a 14% chance of a cut this year. You have to go forward all the way to July of 2027 to find Fed futures trading with a 50% or greater chance of a quarter point cut. That's significant, y'all. That is a lot of movement in the CME FedWatch tool in Fed futures, essentially pricing out for the foreseeable future any chance of a cut by the Fed. Irrespective of the fact that we have a new Fed chair coming into play, he'll be available to vote in the June meeting and forward. He'll be appointed in May, and still Fed futures have no prospect of a cut going forward this year, or at least very little. Obviously, things could change on the ground, but what's changed in the marketplace and what the FedWatch futures are predicting is we now see oil infrastructure being targeted in the Middle East. Iran had a pretty significant attack on the UAE that took out one of their largest gas refiners. Prognostications are it could take up to 5 years to get that back online. When you look at the size of these infrastructure projects necessary to bring energy to the market, the prospect of the war expanding to include the destruction of those means of production in the Mideast now take us from a temporary supply line blockage of the Strait of Hormuz being blocked to the prospect of having to rebuild significant infrastructure to produce oil. That could mean a multi-year lag in production in oil. And obviously, y'all, demand isn't going down for oil. It's only going to go up over time. That demand means higher prices. That's why even though we don't need a drop of oil as a country that comes from the Strait of Hormuz, we're a net exporter of oil in this country. We don't need Mideast oil. The truth is, if that supply is severely hampered, then it lowers the supply worldwide. That drives prices higher, and that includes our price at the pump and everything affected by it. Y'all, so the Fed's looking at that. The Fed futures are looking at that. So the prospects are not great that we're going to see significant improvement in rate, y'all, anytime soon, unless we get a quick resolution to this conflict in Iran. So let's be praying for that. Let's pray for the safety of our troops. I know this wasn't great news today, but it's the news, y'all, and I'm always going to bring it. As always, there's still business being done, y'all. This is pushing consumer sentiment down, I would suspect. Folks are a little bit concerned. That is softening demand a bit in housing. That will have a positive impact on prices. So if there is any silver lining in all of this, if we see a slowdown due to increased energy costs and the uncertainty of the future around the fact that we're at war, that does create a softness in supply, in demand on the housing front. That may present for some buying opportunities, y'all. So we'll be on the lookout for those. Obviously, as things change, I'm going to be reporting it. Stay blessed, stay safe. We'll talk to you next week.